Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and today we're getting an update from Thor Explorations, traded on the TSX.V under the ticker THX, on the London Exchange under the same ticker THX, and on the OTC markets in the US under the ticker THXPF. And I'm joined today with the president and CEO of Thor Explorations, Segun Lawson. And Segun, always great to get you back on the KE Report to get an update on Thor. We want to dive into the news that you put out to the market last week on November 10th, and that is on your Q3 2024 financial and operation results. There's a lot to dig into here, but I guess from a high level, take us through some of the key takeaways on the financials coming out of your producing Segilola Mine in Nigeria.
Hi, Shad. Thank you very much. I think I'll start off by saying it's been a challenging quarter operationally. We had at the beginning of the quarter, a fly rock incident, which led to us stopping mining in a certain area whilst we investigated and put in safer practices. We've had much heavier rainfall and later rainy season, which has delayed our access into the desired high grade area. And also we had a delay in the delivery of the liner. And that all culminated into a production and ultimately selling of less gold than we had planned. We produced just over 20,000 ounces and we sold just over 18,100 ounces. So that sort of sets the background for the quarter. But, I think the positive we can take away from this was that it was still a very profitable quarter for us. And importantly, we were very well on top of our costs, which we think we are now managing at a steady state now. Our costs came in cash costs of $585 per ounce and an all-in sustaining cost of $766 per ounce, which meant the quarter was extremely profitable. We had from our revenues of just over $40 million, we had an EBITDA of $27.4 million and a net profit for the quarter of $17.5 million compared to just under $1 million for the same period last year. And also during that period, we made another significant payment towards our senior debt facility of around about $4 million. And we have just one final payment left at the end of this quarter, end of next month. And that will be a completely delevered balance sheet for us. In terms of the rest of our balance sheet, we continue to strengthen that and making good progress through our accounts payable and transitioning this period from a net debt position of about $2.7 million to a net cash position of about $2.7 million. So, the financial performance has been quite robust and quite strong. And, despite the difficulties we faced operationally, we managed to achieve this. This has meant that, we ended up lowering our guidance to 85,000 ounces for the year. And we believe we're on track to achieve that this year.
Well, Segun, I want to circle back to what you just said there right at the very end, that you were going from a net debt position to a net cash position, because I can't remember a company paying their debt off as fast as you guys have in the recent memory in the gold space. I mean, a lot of companies have had cost overruns, or they don't have enough sustaining capital, or some of them don't even get off the launch pad with their new mines. In this case, you built the first major gold mine in Nigeria in modern time, and you've paid off the debt so quickly. And I think a lot of that has to do with the very fat margins that you have. So even though there was some challenges in the Q3, to have an all-in sustaining cost, as you highlighted, that's $766 US per ounce is kind of amazing in a world where we're seeing majors have about double that cost. Could you maybe just speak to how you're able to so quickly pay down your debt, but also how you're able to keep your costs so low in Nigeria?
I think the key points are, we're processing high-grade material. At the moment, we have a lower than budgeted diesel price for our trucks and earth-moving equipment in Nigeria. And also the power supply, we're using compressed natural gas, which is a big advantage in Nigeria, which comes in about 40% of the diesel price. And it's a major component of our overall cost. So those are the factors that keep our price where they are.
Well, and could you walk people through what the initial debt was on the project and then the time period that you've paid it back off, essentially?
So we had a senior debt facility of $54.5 million, and we also had, an EPC financing facility as well. Those will both be completely paid off at the end of the year. We still do have a stream which continues and is capped at 2.25 times the value of the original stream, which was $21 million. So that will continue to go. But like I say, where does that leave us? It leaves us with all our CapEx, our major CapEx spent, all our plant upgrades completed, the balance sheet delevered, and in a position now where we're really generating cash and focusing on extending the mine life, because the mine life extension now, without the requirements of these significant CapEx expenditures, the additional value from increasing the mine life is highly, highly material to our shareholders now. So look, we've started that. We've made some announcements regarding our deeper drilling. We're carrying out exploration within proximity of the pit. That's always been ongoing, but we're pushing harder on that as well. We have had some initial success. We're now doing various studies now to see what we can aggregate and bring into the existing mine plan from what we've discovered already. So that's all ongoing as well.
Well, let's dig into that a little bit more. The exploration work the team is doing both at depth and on surface looking for other satellite pits. Because to your point, Segun, the sunk costs are already there as far as the mine and processing, and now they're basically paid off. So anything you find is incredibly accretive ounces. Talk to us about the depth component and talk to us about the surface exploration.
Yeah, look, at depth, we have carried out initial structural studies and various studies throughout the beginning of first half of this year with various consultants, and also compiled that with our grade control. And that came up with a proof of concept to design this deeper drilling program, which the initial part of the program consisted of 12 holes. Look, we've been drilling these holes from the late part of Q3, making steady progress with this in the rainy season. We've released the first 2 holes. We do have additional holes to release shortly, and we are looking to build on this initial proof of concept program and flesh out the drilling a bit more, add additional rigs, and chase some of these higher grade shoots at depth. It's also worth mentioning that the first 2 holes we drilled were below the pit. One was 50 meters below the pit, one was 90 meters below the pit. Both intersected mineralization at mineable grades, which we press released. And when I say mineable grades, the better hole was 3 meters at over 11 grams per ton, and the other hole was 1.5 meters wide at 3.2 grams per ton. But given where we are in terms of the gold price compared to where we were when we designed the pit, there is scope for the pit to be opened up deeper and eat into some of this material. So there are some easy low-hanging fruit here and some easy wins, should I say, in terms of increasing the gold amount to be mined and processed from this plant before that inflection point where it transitions into an underground. We have delineated an inferred resource underground already, and it's now getting more confidence in that resource and seeing what part of that resource can be mined out as part of our open pit.
Are you going to put out an economic study on what the underground portion would look like as far as what kind of CapEx you would need to go underground after you expand the pit, or is there more drilling that's needed, more engineering work? Give us some color around, the future of transitioning from open pit to underground.
So we have an existing PEA on the underground, which had some now outdated costs at PEA level. We do think there's a lot more drilling to be done before we start putting these studies, economic studies, together, because we want to actually have confidence in mining these resources that we delineate. We want to have a lot more confidence. We're now doing this for the sake of mining, not for the sake of proving a concept. So the drilling, certainly after this 12-hole program, will be ramped up. Once the results for the 12-hole program are out, we will ramp up the capacity of drilling, should I say, that we have there and continue to chase this out. And then we will have a point where we draw a line in the sand where we can start doing some studies.
Well, let's also look at the at-surface drilling just from a standpoint of grade and what would make sense economically to truck over to the mine and mill. If you found something, how far away could you find a deposit based on the high-grade nature of what you're finding in Nigeria?
Look, we've put an initial 25-kilometer radius, and we have a number of small discoveries within that 25-kilometer radius, and the grade certainly supports this. And we will continue to do that. We've actually got some more drill targets we've worked up over the last 6 months. And the priority and focus has been on the underground. And now we've now got a list of drill targets to drill through over the coming 6 months as well, within trucking distance of the pit. So that's all ongoing. Like I've said a number of times, I'm confident that there will be an extension to the mine life. The question is, how much of an extension will we have?
Well, Segun, I also just want to dig in a little bit more to the unique mineralization here that you're finding and the high grade nature of it. The reason I say high grade is that when I talk to a lot of people about open pit mining, I'm on calls all the time or doing interviews with companies all the time where we're talking about sub 1 gram per ton gold. I was on 2 calls last week. One was at 0.5 grams per ton gold. The other one was at 0.3 grams per ton gold. And those projects are still very economical in the areas they're working on. Your average mill feed grade was 3.22 grams per ton gold. So for people listening in that maybe are not familiar with open pit mining, just speak to the unique nature of finding such a high grade open pit project in the first place.
Yeah, you're absolutely right. We're very fortunate to have this high grade deposit. We have another deposit in our portfolio, Douta in Senegal. That ounce for ounce, it's a much larger deposit in terms of number of ounces, but we're over there, we're looking closer to the 1 gram grade rather than the 3.2 feed we had in Segilola. So, it's we're very fortunate to have this. The small discoveries we've made around of similar grade, the underground resource we've delineated is even at a higher grade than the open pit. The intersections we've drilled underneath the pit certainly show high grade. So, like I say, we're very well positioned now. We've got no capex, we've got no senior debt, we're strengthening our balance sheet, and the gold price environment is, at historical high levels. So we're really excited about the coming years.
Well, let's pivot over to the Douta project in Senegal. You've been very busy there the last few years, drilling and expanding the resources. And I believe that you had a 15,000 meter drill program ongoing at Douta. You do have some updates in this recent press release about some of the RC drilling, but give us a nice update on how things are progressing over at the Douta project.
Yeah, so the drilling that was carried out in Q3, subsequent to that, we drew a line in the sand, and all that data has now been compiled and being used for our PFS, preliminary feasibility study. That drilling was designed to target the oxide. It was also designed to convert a lot of the inferred material into indicated for the PFS as well and get more confidence in the resource. Pretty much all the PFS work streams are done. We're still working through the final 2 work streams, and we're working hard at it. We're pretty pleased with what we see so far. And once the final 2 work streams are done, we will have the PFS output completed and released to the public. And we're aiming for that. The target completion is still this quarter. It is a race against time. I will say, get it done this quarter, but everything is progressing. It's taking a lot of our focus and our resources to get this done. And, we're pretty confident of a positive outcome that will show significant shareholder value that's material to what we're valued at as a company. Here, we're looking, based on the resource we have, a significant mine life that can generate, similar amounts of ounces on an annual basis as Segilola, between 80 and 100,000 ounces per year. Obviously for a much longer period than we have in Segilola. So, it's a very exciting project. It has got significant economic value. We're looking forward to getting the economic numbers out in the public domain. And it's a project that we believe we will build. It's a project that the PFS that we're doing is very detailed. And, we would be looking to fast track from PFS to DFS and make that final investment decision, late next year. So, it's certainly full steam ahead there on the projects in Senegal. And even though we've drawn a line in the sand on the drilling we did prior to the DFS, we are continuing another drilling program because we certainly haven't drilled out all the targets. And that is continuing over the next couple of months as well. And, that can always be brought into the fold at a later date.
All right. Well, we're going to keep our eyes peeled for that PFS that comes out by the end of the year. I know it's a race against time, but when you win the race, go and keep us posted. We'll get you back on and we'll do a deep dive, wrapping some economics a little bit further around the Douta project. But like you say, you're still continuing on with drilling. So this project is still continuing to expand. And it's going to be setting up for mine number 2 for the company with a long mine life. But you did also weave into the recent press release, Segun, yet another project. And we've not talked about this one before. You've expanded your operations into the Ivory Coast, and this is with Endeavour Mining. You've got a agreement to acquire 100% interest into the Guitry Gold Project. I guess just walk us through why you're looking at picking up this project as another exploration focus for the company.
Sure. We've been constantly looking at opportunities all over West Africa. Cote d'Ivoire has been an excellent success story for West Africa in terms of gold mining and building gold mines over the last 10 years and producing great geology, great Birimian greenstone belts, good jurisdiction to operate in. We had set up an office in Cote d'Ivoire about a year ago, even while looking for these opportunities. And we've optioned another project, the Bundiali project. But this particular project, we're very excited about, the Guitry project. It is a project that was deemed non-core for Endeavour. The entry cost for us was very low. It's an excellent platform to grow a business in Cote d'Ivoire for us. It has over 11,000 meters of drilling with some very, very encouraging drilling intersections already. The deeper drilling and the fresh rock mineralization is still open to different interpretation, which we're very excited about following our review. It's open along strike. It's got a number of untested targets, and it's got a huge part of the exploration license that hasn't been explored on. So for us, it's just an excellent opportunity, and it's very exciting. We have now allocated a budget of about $3 million to this project for next year, and we have a target maiden resource for the end of the year. Ambitiously, we're aiming for something above 500,000 ounces. And based on what we see and the footprint that's already been defined, we think we should be able to get there. So, this adds to our growth as a company. It diversifies our portfolio by, stage of development. We have a production asset, we have a development asset. We now have an advanced exploration asset in another jurisdiction as well. So we're excited by this, and there is going to be news flow from this project through the course of next year.
All right. I appreciate that update on a new project for the company. And to the point you just made that you've got a producing asset where you're expanding and, looking to extend mine life. You've got a development asset that's going to be mine number 2. Now you got this advanced exploration asset. I guess just wrap us up, Segun, with how should people think of Thor Explorations as a company? Where do you fit in the universe of gold stocks? And what do you think the key distinguishing factors are for your team and projects?
So I think, first and foremost, we're a gold producer in a very high gold price environment, producing 85,000 ounces per year at a very low, relatively speaking, industry terms, all-in sustaining costs. We're a very profitable company, and that underpins our value. Our EBITDA for the year speaks for itself. We'll be doing this and getting even a stronger balance sheet going into next year. And, that as a base case is significant value for our shareholders, even if we have zero exploration success. The unlikely event that we don't find another ounce of gold in any of our other projects or increase the mine life in Senegal, we do believe there's significant upside just from our existing production. And then you throw into that the upside from exploration. We have, like I mentioned, the underground. We have, prior to transitioning to underground, we do have upside potential there. We have a number of small discoveries in and around Segilola we can bring into the mine plan. And we do believe now we have the ability to ramp up our exploration. We are looking to scale that up as well. So there is growth around our production where we already have sunk our capex and we don't have any significant capex requirements. Then we move out to Senegal, where we have a project where if it was on its own in another junior company, it could be a flagship project with a market cap material to what our market cap is now. It's a project which we will get the first sign of the project economics out in the public domain through a PFS. And it's a project which we believe we can build, and we're very well positioned to build now without any shareholder dilution. So we're looking forward to that as well, getting that out. And it's a project which, following the PFS, can be fast-tracked to a DFS and then into build. The permitting process has been ongoing for the last 12 months already. And then lastly, we're in a new jurisdiction that's got very prospective ground. We've got a very low-cost entry into this jurisdiction, picking up a project that we think will turn into something, and we're excited about. So, we have three fronts here in just the gold space, where we have production, generating value, we have an advanced project, and we have blue sky exploration potential as well.
All right. Well, we'll wrap it up there. It's a great summary, Segun, and looking forward to digging into the pre-feasibility study when you release that later in the year. For those listening into this call, if you want to follow along with all the news flow coming out from Thor Explorations, definitely click on the link below this interview. It takes you right over to the Thor Explorations website, right to their news section, so you too can follow along as updates hit the market. And Segun, keep us posted as more news breaks. We'll get you back on for an update. And as always, looking forward to our next conversation.
Thank you very much.